So I will begin with a big hello and welcome to another edition of Stock Market Mutterings. Doug here with Trade with Doug. And as always, I will do my very best to take a grope in the murkiness here, trying to make some sense out of the stock market for you. And ultimately, I hope whatever I share with you puts a little bit of money in your pocket. As always, if you guys need help with your trading, somewhere here on the screen or down in the description box will be a link. Every day that the market is open, we are trading live. Day trading and swing trading. So no matter what kind of trader you are, if you're looking to take your trading to the next level, visit the link below and start trading with us live. Now we're going to do things differently here, as I announced a week ago, that I'm going to start breaking these down into day trades and swing trades and give you different perspectives on charts, because some of them are set up differently and I want to share those with you. We'll start as always though with the SPY, and I don't think there's a whole lot I can say at this point other than bullish, stupid bullish, ignorant bullish, ludicrous bullishness. I mean, it's just unbelievable ballistic bullishness. So there's nothing else to be said. I've been talking about 4,000 for a while now, and I just don't see the argument for that not happening unless it's a total trick. I mean, we're sitting here right now with the futures at 39.47 or 48 as I'm doing this. So, I mean, you're 50 points out from that milestone. Everything else has hit its milestone. The Qs, the Dow, might as well be this. It's not like we haven't had some bad news along the way. I mean, this week, Jerome Powell was speaking, said the unemployment rate was a mistake, that we were not at 6.6%. We were closer to 10, and the recovery would take longer. What did the market do? It went higher. I mean, that's just the environment that we are in. Now, during this week, we had a couple of rug pulls. This is the daily chart you're seeing here. I've got it expanded, just showing the last few days. I mean, we had a couple of nice little rug pulls right in here. I think that was Thursday and Wednesday. So you had some really strong action to the downside in these periods of where you felt the market was shaking down a little bit. But, you know, when it was all said and done, nothing made a difference. I mean, in fact, if I break it into a smaller time frame here, if I get down to like a 5-minute chart, the close on Friday was just straight out ignorant. So whatever thoughts that we might have had of any kind of sell-off, again, look, you had a couple of really strong sells right here, and right here you had a strong sell here, a strong sell here, but then again, this humongous rip right there late in the session. I mean, what do you say to that? I mean, it's like just basically spitting in the face of the bears here and just letting the market know what its intentions actually are, and that is to go higher. So unless something drastically changes on here, guys, I couldn't imagine the tempo here changing, which means that across the board, most of the stocks that you're looking at, if you look down your watch list now, most of them are going to be bullish. Most of the action is going to be bullish. The market is a buy the dip market until some point in time in the future, one of these flushes no longer results in a violent bounce to the upside. So let's go ahead and talk about a couple of stocks here that I put on the list. Some of these I do own, and I will let you know that. We'll begin with those that I think are both day trade and swing tradable. And I think the stock that I have featured so many times and talked about so many times, one that I've been very bullish on, obviously, is Peloton for many reasons. I talked about the fundamental reasons behind this one, but I also talked about the experience reasons behind something like this that really reminded me of stocks like Roku and stocks like Nvidia. Back in their infancy, when these stocks were trading at $20 to $30 a share, how they behaved on their march to 100. And you can even put other ones in there like Twillo, TWLO was another one that this replicates. But it really looks like that and it feels like that for many different reasons. Now, we obviously know here recently that Peloton has had trouble fulfilling their orders, and they've done about as much as they could here, really put forth a strong effort to try to meet those orders. However, whether you're fundamental or technical, you can see you have a really, really good setup here. Earnings came out, the stock bounced around a little bit, but ultimately it held up that lower area right there in the 145s, and you got a really strong bounce there on Friday. But of course, you have a lot of strong bounces there. But let me delete this off here and try to make some space. Looks a lot like the other day here. If this thing can hold up as we move into Tuesday and Wednesday, I see this immediately moving right up in here to the 171s. And then from there, we can see whether this thing has 200 in it. I featured it not too long ago in two separate videos. One is where I thought it was going to go to 100. I did another one where I thought it was going to go to 200, and I still stand by that. So if you're a swing trader here, maybe it's not the first bet that you make going into Tuesday, but I think if you get any kind of pullback and it holds, I think it's a straightforward trade. You could long where it is, stop down in the 141s here, right underneath of this long continued solidified support, and target the 170 and then ultimately the 200. Of course, a lot of things need to happen for that to take place in a short period of time, but this chart looks really good, excuse me. So I do like Peloton. I like Peloton long. Now another one here is Pacey, which I no longer have a position in, but I've always liked Pacey. I felt it's always been a good trading stock. It's always been a good swing trading stock, and I don't have any beef with the Pacey. I've got beef with other stocks, but not with Pacey. Anyway, earnings out with Pacey, and not so good. Well, I shouldn't say not so good, but it was an opportunity here for the stock to sell off a little bit. In a perfect world, I would like another test of this area. I mean, you can see how solid this support is down here. It would be nice if this would trade down in here. And then maybe you see a nice little check mark back up here. I'm not so sure that's something that can happen here with this stock. Maybe it curls right here and starts to make a low. The thing is, what I'm saying is we're going to need another day or so to see if what happened Friday was either just a product of the bullish market or it's an actual turning point for Pacey. Again, we're going to have to find out here. We're going to need a little bit more time for trading. But in the perfect world, I would like a test of this area down in here and then a bounce, but maybe we don't get that. If Pacey holds up in this area, I think whatever earnings reaction there was is over with. The stock will make it back to 471 and possibly even go through that and move back to 500. So I like this one here. Needs a little bit of work. Another one here that I am in, and I have been in, I think I mentioned this one last week, we'll go with Beyond. Now these first three I also feel are not just day trades. I feel they're swing trades. I feel they're stocks that are sitting at good spots right now where you can enter and hold for multiple days in a row. So that means they're buy the dip stock. Intraday, they'll provide something if that's your thing and you're just day trading only. Then yes, they have some good, there actually might be other ones, to be honest with you. We'll talk about those that have a little bit more volatility, but still I find them all to be good. I think in these you have good setups where the risk and reward is favorable and you could see some movement over the next 2 or 3 days. Same thing here with Beyond. Now this one's been getting a little bit of attention news-wise. You've had some on and off news, both negative and positive for it, and it's affected it in different ways. If we kind of look back, this was a good chart all the way back here. You had your typical bounce, but this actual rally right here that took place was based on their agreement. I think it was Taco Bell, Pepsi, or something like that. Don't quote me, but you had a really good rally right there in this name. And I never liked to chase, obviously, but you got to pull back right into the resistance. And you got a nice little curl coming here off of the bottom. So even though the intraday, I don't think this is the best day trading stock out there because of the way that it acts intraday. It's messy. It's back and forth. It's not as consistent. And I think even though it might still be okay for that, there are other stocks out there that provide far better opportunities when it comes to day trading. However, I think it's a good risk to reward swing. If you're longing here in the 75, stop can be right here. If you're on the whole technical analysis theory, which I believe you should be, that stocks trade from one level to the next. I mean, the next level of that is 221, so that's your target is all the way up here. I mean, that's significant in its means. Really, really nice look. I think when you bounce it down to maybe an intraday, it was a little bit ugly, for lack of a better word. I wouldn't call it ugly, but you had a really good parabolic. Here's what you've had a lot with this stock. You've had this forcing of the issue that every time it gets down into that support, there's usually this violent push. And you saw that here on Wednesday. You saw it again here on Thursday. And then, of course, you saw it on Friday early. But it kind of gave a big chunk of that back, which I would have liked to have held up in here in the 179s. But anyway, I like these here. Now, I want to put into a couple of day trading stocks. And the only thing different about day trading stocks versus well, not the only difference, but one of the differences that I look at is obviously you get a little bit more volatility, but you can often play overbought stocks because you're on such a short time frame that you're not paying so much attention to the daily as you are to the swing trades, obviously. Well, that's the way I look at it. Maybe you're a trader that disagrees with that, and that's cool. So what I mean by that is this space, this Virgin Galactic, is up quite a bit. It's up way too far for me to consider investing or buying this thing here for the short term. And you've got earnings coming up here real soon. However, what it has provided, if you look very closely, is some great dip opportunities. So when I kind of move this down into a 5-minute chart, we have seen a really rhythmic pattern that we've been able to take advantage of in the trade room. And if you guys remember last year, it was the check mark webinar. There's not much more I could say about that either, is how straightforward and simple it is to follow the check mark pattern. So we all been to school. We know what a check mark is. We know when we get the OK check that everything is okay. You're noticing that space is pulling the same type of behavior, this repetition every day, to where you're beginning a day with a sell-off followed by your check mark. You had it here again. I think this was Tuesday. Here's your check mark. Far more aggressive on Wednesday and a check mark. Didn't quite make it all the way back up on this day, but still it was there. Thursday, enormously large check mark. And even followed by Friday with another opportunity. So you're seeing these early morning sell-offs in space followed by a rally. Now that's not uncommon. You know, strong stocks do this all the time and they have a repetitive behavior. And one of the theories I have behind this is everybody piles into a stock that is this high on the daily because they think every pullback is going to lead them to a correction. This market does the same thing. When in turn it just becomes a bear trap and they walk into it down low, chasing the short, shorting down in the hole, and the next thing you know, they're getting steamrolled and one thing leads to another and the stock just keeps ripping. So really good look here. I would find the same thing over and again. If you begin your day with a sell-off here, then I would look to get long down in this area once again for another rally to come back up there. And even if it doesn't work at this point, that the risk versus reward is very low. So I like this space right here as a... Now another one I want to talk about here, which is like a blast from the past for you older folk out there, SSYS. 3D printing is back. Now you guys might remember, I think it was 2012. Don't quote my memory to a T, but I think I'm pretty close. Back then you had this big, they were like the EV marijuana stocks of today. I mean, these things just went on a rampage. You had MCP, and you had SSY. MCP was rare earth, but you had DDD. You had all of these 3D printers that kind of cycle back and forth. I think these things were trading somewhere up in like the 100 range. Again, I'm just quoting this by memory. Big time former Momo, but it's obviously back. Now, just like space, it's hard for me to justify getting long up here. I've already missed such a big chunk of this rally, and it's just not something I prefer to do. That doesn't mean it won't work. It just means I don't like it, and I'm not doing it. So you can do whatever you want to with your money. Maybe it goes a little higher, plus you have earnings. But I do like these for day trading stocks. Like I showed you with space, even in a bear market with these, when they go through a bear phase or a distribution phase, it's hard to get them to just get cleaned out all in one shot. So like even if you look at this one here, if we pull it down into a 5-minute chart, it's doing the same exact thing as space. Maybe not as profound, but it's still there. And that is that check mark pattern. Again, we keep talking about how repetitive this thing is, but here it is, down and up, down and up, down and up, down and up, down and up every day. Now, even that all week long, it was in a longer term downtrend, but still, there's a check mark there every day. Now, obviously, some of these didn't rally all the way up here at highs and get parabolic, but still, I think you understand what's happening here. It's a great formula to use for pivot points in stocks. So it gives you that opportunity to really get in at a quality entry with a great risk to reward. So, did my light go out? I'm going to turn it back on. Anyway, forget it. I'm done anyway. So anyway, guys, I want to thank you for watching this video. As always, if you need help, feel free to reach out to me. My contact details are down in the description box. Thanks for watching this version of Trade with Doug's Stock Market Mutterings. Trade well this week. Until next week, guys, take care. Talk to you soon.